podcast where we put you on the map. This is Ron Costa broadcasting live in the Mappable USA studios in Las Vegas. And today, folks, we're going to return to a very popular subject, which is basically real estate. Everybody wants to talk about real estate, syndicating real estate, and we're going to bring on a repeat guest. But before we do that, I'm sure that there's a lot of real estate being happening over at the QOZ marketplace. So let's bring in Vicki Hutchmala. Vicki, how are you doing today?
I'm doing fabulous today, Ron. Perfect day in Vegas, down to the 80s, and we have a special guest with us today. He's going to talk to us about crowdfunding and how to use it across the industry.
Yeah, specifically on the real estate end of it. So let's introduce Daniel Summers from the eVest technology. Daniel, how you doing today?
Good, man. Appreciate the opportunity, Ron and Vicki. And we're doing great. We're down here in St. Augustine, and the hot weather has passed us. We missed the hurricane, and life is good. So we're busy as usual and trudging through the week as we always do, starting out with a great Monday.
Absolutely, and talk about busy. I mean, you of all people, you've made such strides since you've been on the podcast the last time. It really hasn't been that long. And I know we talked a little bit about your platform and your company. And well, let's remind the people really quickly. Let's talk about your background and eVest in particular.
Sure. So, wow, got to be careful what you ask for there, Ron. My wife says when I open up the refrigerator and the light goes on, I do 15 minutes. But I'll keep it short.
Bit short.
It's hard to consolidate 40 years of syndications, but I come from the real estate business. I'm a Southside Chicago kid and decided to open up a real estate syndication company in Pittsburgh for a myriad of reasons, mostly because my wife lived there, or is from there. And we started with a twinkle in our eye and grew the company from 0 to 147 employees. And we grew it to nearly $2 billion in commercial assets that we as principals owned by syndicating one by one, deal by deal, private placement memorandum by private placement memorandum. When we passed the hat at the cathedral and the synagogue and dialed for dollars and all the things that you wanted to put a gun to your mouth. But it took us 10 years. We did it successfully and underwrote its IPO 10 years thereafter, sold the company, and retired.
Well, there you go.
For the first time. For the first time.
Right.
You can't keep a good dog down. Is that what you're saying?
Well, my wife wouldn't let me to stay in the house and needed to go do something, so I decided to get back into space. And I'm an old traditional syndicator, and when I saw this when I saw the passage of the Jobs Act and the general solicitation laws changed, it was like, holy heck, the floodgates are about to open. And I wanted to get ahead of it. So, I came off the golf course and decided to build a team. But I'll tell you what, I didn't realize how large the uphill battle was going to be to mix real estate and technology in the same conference room. It was an incredible battle. It's like giving birth to a basketball. But after 5 years, we succeeded. And we brought to market eVest technology, which is an automated syndication platform that takes advantage of technology and the SEC exemptions. So it's pretty cool. Be careful what you wish for or ask for, because we're overwhelmed with business, which is a good thing, I guess.
Absolutely. No, it's a great thing. And one of the reasons why I think you're becoming so popular is basically your slogan, in a way, is the fact that people don't have to spend a ton of money to do these PPMs anymore. Is it right?
Yeah. So we touched on two pain points in the syndication industry, which is, incredibly important to make sure that you're aware that, there's ways to take advantage of the SEC exemption and the less expensive method of doing business. So the two major pain points we addressed was cost and time. So, PPMs, landing pages, subscription operating agreements, all that costs in excess of $20,000, okay, easily. Time, a PPM alone takes 4 to 6 weeks. Now, if you look at the technology that's available today, okay, all this can be done for literally pennies on the dollar and in days, not weeks. And that's through the SEC exemption and using high-end technology. So, I was really good in the syndication / securities arena. I just needed to get acclimated to the technology arena. So I force-fed myself, the intricacies, the boundaries, the parameters that technology was creating, in a moment's notice. And the key thing, Ron and Vicki, to acknowledge, and this is really, really important, is that real estate has yet to embrace technology. So you can't open up a fire hose full steam and expect syndicators to digest, this artificial intelligence and, the instantaneous reaction of technology within the real estate space. It's too hard to digest after, using your HP 12C for years and, putting together $15,000 PPMs. It was difficult, and that's the uphill battle I had to circumvent to convince the syndication industry, especially in the real estate space, that, the Reg D 506C exemption that came around as a result of the Jobs Act in 2013 eliminates the traditional PPM. I am just telling you, you do not need to put together the traditional 100-page, 10-pound, $15,000 PPM anymore, as long as you adhere to the 506 laws. And then secondly, the general solicitation of securities. You can now advertise your deals at the back of a Cessna 182 across Ponte Vedra Beach and not worry about the SEC. So times have changed. The industry hasn't. Okay, times have changed. The industry has to catch up. Okay, it's a $1 trillion industry that's still antiquated, and they just need to be educated.
You think the industry is just likes it in a safe space and doesn't want to move forward into the 21st century?
Vicki hit the nail on the head. So the baton hasn't passed, okay? The larger syndicators are not the millennials, okay? The larger syndicators, if it's not broken, don't fix it, okay? So they have a system. They've got in-house legal counsel. They got a great system. They've become extraordinarily successful as a result of that. As the younger guys, the younger girls, the younger, age groups come in that have been educated on technology, they're the ones to accept the technology as part and parcel of their daily routine. So a majority of our clients are probably millennials plus or minus in nature, so they can grasp the technology and the nuances of the exemptions. But I'm not being facetious when I say the older generation syndicators are of the mindset, it ain't broken, so don't fix it. Let me continue business as usual. Plus, you have an entire industry, a cottage industry, if you will, of attorneys that insist that private placement memorandums are mandatory if you're going to be syndicating private capital. They're not mandatory.
Well, of course, that's a job security. That means you have to. And if you change an industry with the people who are comfortable in the older way of doing it, then folks who believe themselves to be experts are no longer the experts because they have to learn a whole new thing, and the attorneys don't want to do that. They just want to keep charging you for the same old stuff because it worked before, it'll work now, and not only that, I can raise my fee for you.
Well, yes and no, Vicki. So yes, that's true, and no in respect that some attorneys, a lot of attorneys, don't keep up with the regs and don't keep up with the exemptions for a myriad of different reasons. I just got into a discussion this past week with a client who's now a client, who was a prospective client then, and their attorney insisting that their client register in a half a dozen states because of blue sky laws.
Right.
And Reg D has changed that. Okay, Reg D has eliminated blue sky laws. So you only need to file a Reg D in the state in which your LLC or your entity is filed. So it's an uphill battle educating not only syndicators but also attorneys. I've come out with some white papers in the past. I've written articles and blog posts specifically stating regs and regulations, et cetera. And it's still an uphill battle. We're winning it day by day. We're winning it, but at the end of the day, little by little, yeah. But we're winning. We're winning, and that's a good thing.
Well, one white paper in particular that I'm looking at right now that you wrote is called How Regulation D and the Elimination of Traditional PPMs Makes Syndicating Capital More Efficient. And one of the points that you already touched on this was the fact that you can solicit to the general public right now. And that means using social media. It means using all webinars, any kind of marketing techniques that you'd like to do, which was previously unavailable. Isn't that right?
So general solicitation means just that, Ron. So you can literally, like I said, put up a billboard or take out a full-page ad in Forbes, generally soliciting for prospective accredited investors. That's the caveat. So you're soliciting prospective accredited investors. So you can solicit to anyone, but there has to be a validation of accreditation somewhere in the process. So you can get them to look at it, you can get them excited, they can promise to pay you, which we call pledging on our site, pledge you $15,000, but they can't invest, they can't fund their investment until they get validated that they are indeed accredited. Now, this is what's interesting. Yeah, here's something that's really interesting. So I'm going to date myself here. I was first registered with the SEC and licensed with the NASD back in 1986. The accreditation benchmarks, this is amazing, have not changed since then to today. So back then, in 86, I was a young kid in San Antonio, Texas, a senior vice president of a savings and loan, and I had to get registered with the SEC. And then the benchmark was a $200,000 income or $1 million net worth excluding your primary residence. Today, it's the same thing, okay? Now, what's that? 86, 96, that's 30 years ago, okay? 30 years ago, the benchmark hasn't changed. So the syndicators, 99 out of 100 syndicators elect to go with the 506C because the 506B is somewhat prohibitive. You can't generally solicit because you're allowing up to 35 non-accredited investors. So you have to put the investors, non-accredited investors, through a completely different validation process and so on. But with $200,000 benchmark or $1 million net worth, excluding your primary residence, you're reaching a hell of a lot more people today than you were in 1986.
Oh, no question. So, no question. But the interesting part about that, though, is what determines the accreditation in terms of, like, can I just say I'm accredited, or do I have to prove it somehow, right? There must be some kind of an onboarding that validates this in a way that doesn't just take my word for it, right?
Well, the SEC states you have to use a reasonable effort to accredit them. I don't know what that means. It's ambiguous. So everyone says, including me, use a third party. So there are actual companies that validate the accreditation of third parties. But there's two other interesting ways to get accredited. If the sponsor elects to accept that, you can send in a letter from their CPA or accountant or from legal counsel on their stationery that certifies, quote unquote, the fact that investor is accredited. Now that can go into your file, and using my technology, you can manually accredit them. So on my eVest technology white label platform, the internal process is one that's automated, and they are requested to upload their financial statement or tax returns, or they can elect to say, Ron, I'd rather send in a letter from my attorney. It's less than 90 days old, and it'll certify. And I'll take that letter, and I'll say to myself, I'm okay with this, or I'm not. Okay, if I'm not, I'll make them go through that validation process with the third party, or I'll take the letter and put it in the file. And all that means is I've shifted that liability from myself onto someone else.
That's what I was going to say. You've shifted the liability, so someone else is doing the certifying.
Absolutely. So if the SEC, Vicki, ever walks into my office, guess what? I pull that file out and I say, here you go. And I give them that file of letters, or I turn them on to our third-party validation company, and the world's beautiful. I don't have any liability. Yep. It's as simple as that. It's when you try to get cute and circumvent these pretty simple benchmarks, okay, that in a deal goes south, now you've got a problem. And you got a problem with a whole host of issues from the investor down to the SEC. That's what you want to avoid.
But you hope that you've done enough homework and you've done enough investigating to cover any details that might come up down the road to prevent that, because your whole point is to create a project that is successful. And sometimes that's all in the details and the homework beforehand.
Well, it's real estate. Okay?
Well,
it's real estate, and a lot of things affect real estate and the economy. Okay? Every 18 years, you're going to have a valley. Every 18 years, you're going to have a peak. So at the end of the day, it's where are we in terms of the peak and the valley? So it's real estate. It's going to happen. It's all influenced by third parties, et cetera. So when we do hit a valley, just make sure, you did a CYA and you did everything correctly.
Yeah.
Like on our site, we have a digital PPM. You have to upload enough information for a accredited investor to make a quote unquote prudent business decision. So, all of the risks are there, the risk mitigants are there, the income and expense statements are there, pro formas are there, due diligence is all there, so they can read that and say, okay, I like this deal, I can move forward. And the SEC views that as they're accredited, they're supposed to be sophisticated and intelligent, and they make this much money, they can afford to lose that investment. So that's why it's limited to accredited investors.
Okay.
Now, on your platform, do they have to somehow validate or verify that they've read these disclosure requirements and things like that are necessary?
No, it's all offered to them. It's there in black and white. The disclaimers are there, et cetera. The key element here is they can do anything they want. They can do anything they want. However, they cannot invest without going through the accreditation process because the technology will not allow them to advance. So it's all there. I always tell my clients, we can lead them to the water. We can't make them drink. So it's all there. The disclaimers, disclosure, due diligence is all there, okay? Read it or don't read it, okay? But it's there. And then they continue with the process. They pledge their investment. Then they go through the accreditation process. If they get accredited, the SEC says, okay, they're sophisticated and they're wealthy enough to afford to lose this investment. And that's where my liability stops. So If they lose the investment, they lose the investment. I'm sorry, but it happens. But at the end of the day, that accreditation process is incredibly important for the liability side of the offering. And we make sure that it's rock solid. An investor cannot walk through that without third-party manual or technology-wise allowing the gate to open for them to move on to the next process, which is the execution of the subscription agreement.
Yes, and another point you made on your white paper was the fact that there's no more 30-day waiting period with this as well. Can you explain what you meant by that?
Sure, that's been waived. The Reg D did a lot of things. Okay, one of the things it did was it waived that 30-day period because, once again, it's an accredited investor, okay? And they are a sophisticated individual that can afford to lose that investment. Whereas with a 506B, as in boy, a non-accredited investor, all the bells and whistles are there to say, don't invest in this deal, don't invest in this deal, don't invest in this deal. You're going to lose your money, you're going to lose your money. So consequently, you're not allowed to generally solicit for these people. Okay, they have to go through the whole process of understanding investment from A to B. You have to have a KYC, your customer form for them to fill out. And then you have to have a personal conversation with each one of these non-accredited investors and say, have you ever invested in real estate? There's some risk here. Okay, you could lose your money. All right. So at the end of the day, it's a process that most of our clients don't want to go through. Frankly, they don't need to because the Reg D 506C is so accommodating. It's unbelievable.
Yeah, it really is. Now we've been talking about this so far from what the investor has to do as far as this goes. Let's talk about the projects themselves. Now, you have these guys who are, I guess, syndicators and sponsors. Is there a difference between the two terms, or are they used interchangeably, syndicator and sponsor?
No, they're also called issuers. Okay, they're issuing securities. Okay, so we're actually syndicating securities. You're not syndicating real estate. You're syndicating an ownership interest in an LLC, as an example. So it's a private offering of a security. So they could be the issuer of a security, they could be a sponsor of a security, they could be a syndicator of a security, but it's all really the same thing. So they're actually syndicating private capital, okay, as a security, okay, to have ownership in an asset. Now the asset could be a cannabis farm, it could be an office in downtown Detroit, or it could be an entity that is selling municipal bonds, okay. We have all of those kinds of clients on our platform, but at the end of the day, they are investing into, they are buying an investment, a security, investing into an entity via a security and buying the security, which equals units within an entity that owns the asset.
All right. Now, these people, they come to you with the marketplace now at the eVest Marketplace. Is it eVestMarketplace.com? That's your website, right? The site?
So it's eVestMarketplace.com. That's our marketplace. So we recently created eVest Marketplace as a portal in which to house all of our clients' deals. They go up and they go down daily. We even have coming soon deals there. So as a result of being in the space as long as we've been in there, nearly 5 years, we have a massive database of investors and prospective investors that are constantly visiting our site. So we'll get several thousand sets of eyes on that marketplace looking at deals for themselves to invest into. We've got 78 legitimate billionaires in our database. They go there and they look at deals to invest into. So it costs nothing if you're a client of eVest. It's automatically, if you want it, it's housed on that portal. And once again, eVest technology doesn't show up anywhere in the process. It's simply, our client's deal, and the investor looks at it, and it immediately is taken to their offering page. So we're kind of like the Rolls-Royce engine behind the Ferrari. Okay, no one sees us. We're just driving this train. Okay, we're not an intermediary. We're just the technology. We don't handle any capital. All we are is the facilitator, okay, of the syndication from A to Z. The key takeaway from our site is an investor, as an example, never, ever, ever has to leave our site or our client's site, whether it's to review a deal, to get accredited, to execute a doc, to fund his deal directly from our portal. They don't have to go to Wells Fargo online. Okay, it's all within our portal. And even our distributions are made online automatically, directly from our client, our sponsor / issuer, into each investor's operating account directly. So it's automatically calculated and automatically distributed along with the K1s. So it's an awesome
brilliant
platform. Yeah, it really. Yeah. I mean, it's all encompassing. And the only reason I can do that is because I've done it from a practical perspective as a principal for so many years. So we didn't create a bunch of features and say, here, Ron and Vicki, here's a bunch of features, and you can syndicate your deals using these features. But then you get to sit back and figure out what's the pieces of the puzzle. How does this all work together? Now with our platform, it's from A to Z, and it's a very seamless process. I call it harmony. Each page is harmonious to the next, to the next, to the next. It's just leading the investor from the review of the deal all the way down to the funding. And there's no follow the shiny things in between.
And you could pat yourself on the back for that, for sure, because you've actually done it. You've seen it firsthand and actually, in the trenches, like, okay, this is what I need. This is what should happen. This is the next logical step. This is what we need to do next, et cetera. And you use that background of yourself to create this in a logical way. So I commend you for that. It makes a hell of a lot of sense. It's great. I mean,
yeah. The key thing, though, Ron, is that I know what not to put in there, too. So there's 1,000 things I'd like to put in there, but don't put it in there, man. But don't put any shiny things in there because people will follow the shiny thing. It's very simple. Okay, show them the deal if they like it. Get them to pledge. Get them accredited. Get them to execute the docs and get them to fund the deal. And after that, the investor gets their own dashboard, and they can follow real-time data day in and day out. It's a real simple process.
Well, that's what I was going to ask you. Take us through the process. When a client comes to you and says, I have this project that I'm working on and I want you to help us, then what do you do?
Well, it's a real
Aside
simple
from what
process
you just
for them.
Explained to us, though.
Well, that's the investor side. The sponsor side is a little different. So we've really dummied that down, too, to the point where we have hired very responsible customer service representatives that work for us full-time. We don't contract any of this work out. And a client, once they're on board with us, will receive an all-encompassing letter from their personal customer service rep that says, okay, Vicki, you need to send us the following information. And as you send it to us, we'll begin creating your offering page and your landing page. So you're urged to send in your logo, your colors, your contact information, your social media information, your banking information, et cetera, et cetera. And then the deal flow, the deal information comes in, and it's all created for you. And it's all copy-paste at the back end. You have an investor community in your Rolodex, we'll upload that also. So once that's created, okay, we publish it. It goes directly to our marketplace. Starts the process there on the marketplace. So that same day, there's activity on your site. On top of that, we actually create a landing page, which is utilized to digitally market your deals. So we create that for you. So you have, 200 investors in your database. You can actually send them to the landing page we created for you, which has a live URL at the bottom. So prospective investors can hit the URL, and it takes them directly to your private placement memorandum. We, in turn, select, a couple of thousand of our internal database that we feel may invest in your deal, and we'll send those your deal, your landing page, and the ones that open your landing page as a result of receiving it from us digitally, we'll upload to your quote-unquote community, which is your list, your proprietary list of investors. And we'll call you and say, hey, Vicki, we just uploaded 300 names that opened the email we sent for your deal. Go get them. And you're going to now start that dialogue with those investors. And dear investors, saw that you opened our email. We think it's a wonderful deal for these following reasons. Would you like to set up a telephone call, et cetera, et cetera. So we do all that heavy lifting for our sponsors. So once they get their deal, they turn it over to the customer service rep, and she's always backed up, or he's always backed up with a programmer in the event there's some technical issues or questions. And within several days, 4 to 6 days, or however quickly the client gets the information into our hands, we upload it and we go to market. It's in the market within a week.
Wow. So are all your clients or projects real estate?
No, not even close. Originally, it was all real estate. That was a low-hanging fruit. But as time went on, we've got investment bankers. We've got a lettuce grower. We have a lot of operating companies. We have cannabis growers raising capital for growing houses. We've got municipal bonds. We've got a myriad of different industries. On our site right now, we have a lot of funds. As I explained, I think before we got on this podcast, we have a client that buys returned items, if you will, from Walmart and from Tom McCann, et cetera. They bundle them up and resell them, and are offering massive returns. So, as wide as your imagination can yield, those are the types of clients we're bringing in. So we've expanded far beyond real estate. We're in about a dozen different kinds of industries, because keep in mind, we're a syndication technology. So it doesn't matter what industry you're in. If you're syndicating passive capital, my technology is applicable. And the other cool thing is that it's scalable. My technology does not read zeros. It doesn't care if you're raising 100,000 or 100 million. It doesn't matter. The technology works the same. We've got the fourth largest construction company in America as a client, and we've got guys that fix and flip houses every month as a client, and it works just as efficiently for both of them.
Where do broker-dealers function in this scenario? Not at all?
No, not at all. Broker-dealers, because it's a Reg D 506C, okay, we do not need to be broker-dealers. We do not need to charge those onerous fees to raise the capital. Keep in mind, you're paying some serious fees to BDs to raise capital.
Oh, absolutely.
Okay?
Yes.
And
yes.
We only have a monthly license fee of just under $900. So our clients are getting $1 million of our personal capital of technology to bring this to market, and 30 years of syndicating experience for just under $900 a month. So this is why we're overwhelmed with business. We know what we're doing.
I bet. Yeah.
Okay?
Yeah.
We're not out of college.
Phenomenal.
I've always said, Ron,
and you're not handling the deal. You're just providing the means for A to connect to C, and you're just in the middle.
That's exactly right. Yeah, we're the technology. We're behind the scenes, and I've always said that real estate's an art, and technology is science. Okay, you can learn science in college, but real estate is an art, and that takes a long time to learn it. And I learned it over 30 years, and that's why I was able to apply it to this technology and create it and develop it, design it with this kind of technology. We've kept it simple, okay, and seamless and easy to handle. And so the investor experience is really easy at the front end, and even at the back end, we offer whatever heavy lifting our clients need, right down to the fact that we'll upload their deals for them, whatever they need. So we have clients that don't know anything and are able, anything about technology, and then we got clients that are as good as that are programmers. So we can handle anything in between.
Well, here in Vegas, I run into a lot of people that don't know anything, so we have that in common. But well, one more question before we close out this podcast for you. Can you talk a little about? I know you mentioned it before, a little bit about the private label aspect of this.
So yeah, that's pretty cool. So we are a white label platform. So we actually brand the portal with your logo, your colors, your social media handles, your contact information, disclaimers, everything that's about you. So investors come to we'll call it a white label website. We've created that for you. So eVest shows up nowhere. It's all about our client. So our clients have their own portal that we created for them. We've wired it from the back end, so the front end looks like it's your company's website, and that's key. So all of the dialogue, the communications between the investor and our client, we're nowhere in between, zero. So we're not an intermediary. Once the deal is up and loaded, I remain in an advisory role. Okay, there's not a client we have that I don't speak to at least once or twice a week. So I stay in an advisory role. Yeah. And,
so if I go on.
And I actually conduct the demos myself. The most important part of the company is customers and clients and future clients, and we take that very serious. So It's not like you submit a question via email, we'll get back to you in 5 days like everybody else. It's like you can pick up the phone and call Dan Summers on a Saturday afternoon, okay, and I'm on the phone, and I own the company, and I've got my 7 figures invested in this company. So
right.
We're not an egomaniacal company. We know what it takes to build a company from scratch. We're doing it again.
Well, it's all about customer service.
Yeah.
So let me ask you a question now on the URL side of it. If I have a domain name and somebody types in www.mydomain.com, are you saying that that can go to the offering itself and it will look like their own personal website, or you can embed it into their website somehow?
Well, it can be embedded. So the answer is yes. Okay. So if you have your own website, okay, you obviously can create a tab which will take you to your offering page, okay, or vice versa. We can create, an offering page with your website embedded in it. So it's not one and the same, okay, because the offering page is different than your website, but they can each host one or the other.
Well, it could also be an offering tab on a website, but you would still be listed into your eVest marketplace, though. Was that right?
100%. That's exactly correct. That's exactly.
Because I would think that one of the bigger benefits of being on that site is the fact that you mentioned before. You know, you have a lot of traffic going into you. You know, somebody may come from one project, see yours, like yours better, perhaps, and the marketing that gets done on your site is certainly an added advantage for issuers who may want to list their project on that versus just having their own domain name and you know, getting the traffic themselves.
It's all about our clients being successful. I mean, that's the bottom line. Okay, what good is it to have 100 clients and no one's raising money? All right, they're going to be gone in 60 days. So it's all about driving traffic to their portal, driving traffic to their deal. So what we bring to the party that no one else does is the amount of traffic we bring to our clients via our website, via our database. Okay, we just push a lot of traffic there. They have to close the transaction, but we'll push traffic there constantly. And as a result, you know, our clients are doing quite well.
That makes sense. Now, you have a great system. I've seen it for myself. I'm really impressed with what you're doing. And like I said, when we started the podcast to begin with, you're doing this in a really short period of time, too, as far as the progress you've made in the last month and a half. It's unbelievable. You guys are doing great.
Yeah, we hit the street with a white paper that really, it was a breakthrough. I mean, we hit a nerve. I think we just hit a nerve, and people said, well, wait a second, really? We have to spend that $15K and wait 6 weeks for a PPM. And, oh, by the way, this is the regulation that you cited, and this is, you know, the law. And we hit a nerve. And, it's taken off.
Sometimes people can't see the forest for the trees until someone brings it to their attention.
Well, that's just human nature. Same thing with me. Okay, it's just human nature. You just got to sometimes hit him in the head and say, well, wait a second. And then, you know, on top of that, Ron, it's priced. We hit a price point where it's very hard to say no. It's very hard to say no. So we think that we can, because the scalability of the site, we can utilize our technology for the larger guys. And then the new guys, we have tremendous traction within the military right now, believe it or not. And those are the guys that they can afford the $900 a month, okay? Because we replace the $15,000 PPM. We give them free operating and subscription agreements. We create their landing page for free. We get them in business overnight, for 90% less. And as a result, we've got traction in places I didn't think we'd get traction. And the opportunity zone space is just a booming endeavor for us right now. The military sponsors is booming.
Yeah, well, we could do a whole podcast on the opportunity zones, and maybe we will do that. Actually, Vicki, this is a good tie-in topic for sure. I mean, but I could see that.
And
I'm
I
actually
have
speaking at one. I'm speaking at one in Greenville next month, so I'm happy to speak to you afterwards and can speak to the opportunity zones at that point in time. But that's a booming industry. That's a whole podcast unto itself.
Yeah.
Yeah. All right. Well, this was really interesting. Daniel, how do people get a hold of you if they want more information or if they want to do a demo or something like that?
Sure.
What's the best way to get in touch with you?
Simple email address, D as in Dan Summers, SUMMERS, at eVestTech.com, EVESTTECH.com, D Summers at eVestTech.com, and we'll get back to you, within an hour.
That's after you answer the other 50 phone calls, right?
Well, we'll get back to you in 51 minutes.
Yeah, that's right. All right, Vicki, you have any last questions here for Daniel at all?
One last
Otherwise,
question.
we'll close this out.
Dan.
Okay.
Go ahead,
do you think that your platform will eventually evolve into a tokenization blockchain type scenario?
I don't know.
Basically,
and I say that with a lot of seriousness in the answer, because it's been investigated, it's been discussed endlessly. I still need to see where blockchain's going. I'm trying to find the correct application for it on my site. I'm not concerned about the security of my site. Our payment processor is the Rolls-Royce of the industry with military-level encryption. So the security on my site is second to none. We use a ridiculous amount of servers for the redundancy. So blockchain may or may not be for us. I just don't want to be, saying, well, we use blockchain because everyone else is using it. It's got to be applicable. It's got to be meaningful. So at the end of the day, the jury's still out. But it's something that has been discussed and probably will be discussed again here soon. But if it's applicable, we'll join that party.
Interesting.
Yeah.
Okay.
All right, folks. Well, listen. Let's close this out. Daniel, thanks again so much for taking time out to come talk to us and our audience about this. This is a really fascinating topic. And everyone out there, I mean, you got to go to eVestmarketplace.com and check it out. I've been there myself. I'm telling you, it's a great site. He's did a great job. And again, thank you for your time today and being on our podcast. All right, my friend. Thank you, Vicki. Be good. Yep. And folks out there, you're listening to the Mappable USA podcast over at mappableusa.com. If you go there, scroll down on the homepage, you'll see all our syndication sources. You pick the one you like best so you never miss another Mappable USA episode. You want to be a guest on the show, perhaps, like Daniel was today, there's a guest tab there. Just click on that, fill out the form. We'll see what we can do about getting you on the show. So, everyone, thank you so much for being a Mappable USA podcast fan and everything that you do for us, and subscribing and promoting and doing all those things. So thank you very much for listening. Have a great week, and we'll be back next week with another Mappable USA podcast. Have a great week, folks.